Yesterday, I made a video about the Bitcoin halving, and a lot of you guys hated it. Something I said stuck out so much to you guys, and it really hit a nerve. I said that all of the price predictions of the next bull run are built upon the foundation of the halving cycle. And there is a possibility that the halving cycle is broken and will not repeat the same pattern it has in the past. I got killed over it. But today, I'm going to tell you why that may not be a bad thing. Let's get it. Hello and welcome to BitBoyCrypto, your one-stop shop for all things related to Bitcoin and cryptocurrency. I make videos on this channel almost every single day. If you like what you hear or see, then please make sure to hit that subscribe button and click the bell to turn on notifications. If you would like to take the conversation even further, then please make sure to join one of my two Telegram groups, the Bit Squad for regular crypto chat or Bit Squad traders to discuss trading strategies. All right, guys, today we are going to be taking a look at the Bitcoin halving again. Today, I'm going to present a much more bullish case for a broken halving cycle that I believe you will be happy to hear. I think after yesterday's video, there were some hurt feelings in here. I could tell by the comments and the number of dislikes on that video that it made a lot of you guys uncomfortable, or maybe you guys just hate me. I don't know why you watch. And I get it. We've been talking about why Bitcoin will moon during this cycle for a year now or more. So to hear me say that maybe things are changing, it upset people. Now, if you missed that video, you can watch it by clicking the link above. We also have a $100 Knowles giveaway on that video, so if you want some free crypto, check it out and then come back after you have the context for today's video. Now, in yesterday's video, I laid out the mega bearish case for a broken halving cycle. Basically, if Bitcoin cannot climb to $8,000 over the next 3 weeks, then Bitcoin could be in trouble. And why do I say that? Well, basically by averaging together the first two halvings and the correlation between one another, I arrived at 8K as the key level Bitcoin needs to be at in order to stay aligned with the last two cycles. If it can't do that, or at least get very close to that number, then Bitcoin will be totally breaking away from the last two halvings. As we've approached this time, there has been so much excitement about the prospects of the Bitcoin price due to the expected effect of the reduction of block rewards. But let's look at this logically for a second. This is only the third halving cycle in Bitcoin's entire history. We literally only have two instances to go off of, and that's not a lot of precedent. Imagine the first person to ever flip a coin and call heads or tails. If they flipped it twice and it landed on heads both times, would that mean that it was definitely going to land on heads again? I mean, that's kind of an oversimplified example of how to say what should be obvious to you, which is we don't really and truly have enough data or history in this new asset class to be able to unequivocally predict whether Bitcoin is going to go up or down. We have made educated guesses on its direction based upon the limited history that we do have. But the truth is, we could look back on Bitcoin in 20 years from now and see that there really isn't a huge amount of correlation between the Bitcoin cycles. Maybe they're all going to be different. And could that be bearish? Well, yeah, of course it could be bearish. Who knows? Maybe Bitcoin could still be fighting to be above 10K in 10 years from now. But I seriously doubt that is going to happen. I think even the most negative of all Bitcoin bears would say that is unlikely. But what is the bullish case for a broken halving cycle? Well, I'm glad you asked because I'm going to tell you. But before I get to the crazy bullish scenario Bitcoin could be setting up for, I want to show you a product that I am extremely bullish on, which is Crypto.com. Crypto.com's tokens CRO and MCO have been charging up the ranks on CoinMarketCap.com, with CRO firmly in the top 20 and looking to go higher. This company has the chance, in my opinion, to be the next Binance, and their tokens have a real shot to make big moves and get a lot of people rich. With the Crypto.com app, you can earn crypto by staking in its secure wallet, and you can also exchange tokens for each other inside of the app. But the best feature is the ability for you to spin crypto with the MCO card. I bought a grill with it today. These are sweet metal cards that aren't only stylish, but allow you to do your part in bringing on adoption. If you want to try out the card, you can get $50 for free by visiting mcocard.bitboy.live or by using the code BitBoy when you sign up. Spending your crypto makes a lot more sense though when we are in a bull market, and we just might be heading there. During the last 2 cycles, Bitcoin has dropped immediately following the halving. So everyone basically expects the price to fall very significantly in the weeks following the actual day of the halving, which is expected to be around May 12th. But what if, just what if, maybe the price correction in the beginning of March was the actual halving correction? Now, when you go back and look at the charts from the previous 2 halving dates, you start to see some very interesting data. In 2012, the halving occurred on November 28th. But when we look at the weekly chart, you see a pretty big reduction in the price up until 2 weeks before the halving when the price started moving up. But the price reduction was actually a huge 30% drop. The early Bitcoin hodlers must have been pretty nervous and sweating at that point for sure. But then again, there were no crypto news websites or YouTubers back then to pump them up for a halving cycle. That's why I'm here. The week after the halving, the price only dropped 6% before rebounding very hard very quickly. Now, we look at the 2016 halving chart, we find something extremely interesting as well. This time, Bitcoin experienced a 3-week drop after the halving. No doubt, July 2016 hodlers were very nervous about the prospects of their bags when the Bitcoin price began falling. They must have been fresh out of hopium. Interestingly enough, though, the price dropped 30% in the 3 weeks following the halving. It was almost exactly the same percentage drop that Bitcoin had leading up to the first halving cycle. So this brings us to our current cycle, the 2020 halving. What can we expect? If in the first cycle, the price dropped 30% leading up to the halving, and during the second cycle, it dropped 30% after the halving, then what kind of witchcraft voodoo magic price drop are we going to be getting this time? I think there is an argument to be made, a legitimate argument that we will not see a 30% drop. In fact, we may not see a drop at all. While the first 2 halvings both had those 30% drops around the time of the halving, give or take a few weeks, we saw an eye-popping 60% drop this March, twice as much as either of the previous halvings. To think that we could be in for another drop after that is pretty crazy. When people talk about the halving price being baked into the current price, what they are generally saying is that we won't see a dramatic price increase at any point due to the cycle. The idea that the Bitcoin price is baked in around the halving is not a new idea though. People also said that in 2016 it was baked in, and we see how that turned out. They really couldn't have been more wrong about that idea. We saw the biggest price pump in history due to that cycle. But it could be possible that during this halving cycle, the price drop is already baked in. What I mean by this is that the world pandemic has obviously had a huge effect on the entire world economy and every financial market. Since people panic sold Bitcoin at the beginning of the world crisis, then that may have eased off the sell pressure that would usually come immediately before or after the halving. Basically, it got all of the halving selling out of the way. This is why, ever since the huge drop at the beginning of March, we have seen the price steadily increase. And we could continue to see that. Without the Bitcoin price dropping immediately after May 12th, that means Bitcoin could actually be closer to mooning than we thought before. But remember, take every price prediction with a grain of salt. We all want the price to moon. At this point, I've given up on a Lambo for this year and just looking at the new Corvettes instead. I know, poor pitiful me. But don't get me wrong, if we get back on track, I still got the color from my Lambo picked out. And that's basically the attitude that you should have as well. You shouldn't invest every single dollar from your paycheck into a speculative asset like Bitcoin to the point where you can't pay your bills. But you should invest enough to be able to have skin in the game if the price truly does moon and go back to all-time highs or a 6-figure Bitcoin. That way you'll be sitting in a great position. Of course, I'm not a financial advisor. We have price charts that have held up to the test of time when it comes to Bitcoin, such as the rainbow chart or the stock to flow chart. These charts have been proven correct time after time. But the truth is, 10 years is not enough history to truly make rock solid predictions. But now it's your turn. Drop me a comment down below and let me know whether or not you think the Bitcoin price will drop after the halving. I hope you enjoyed this video. If you did, please make sure to smash the like button and hit subscribe to become a member of the fastest growing community in crypto, the Bit Squad. Thank you so much for watching. Have a blessed day. BitBoy out.